for before, because I know there's gaps because we were crazy busy and run off our feet. But now I want to make sure that you're getting that. Okay, so interrupt me.
Good morning.
Hey, Jonathan. Oh,
How are you? I'm going to turn on some lights. I'll be right back.
that's all right. Okay, and then we're doing the webinar that we're doing right now is going to be open for all the hears and need, but it's live. So if you do need to ask Leanne something, like it's recorded, you'll have to whisper. Awesome. So hey, Jonathan, how's it going?
I'm well. How are you?
Yeah, good, good, good. You got a haircut or all
I
of them
did.
cut? So my grandfather used to say, I got all of them cut. Or
I got all of them cut. I got, yeah, totally.
Very nice.
How is things out that way?
Good, good. Crazy, but good. We're trying to get ourselves ready because we essentially, after next week, we're closed until January, essentially.
Well, I'm going to have your tax return to you this week.
Awesome.
It might be today.
Cool. Sounds good. Yeah, but no, because we've got Connect.
Wow, you really sounded so thrilled there. You're like, cool,
Oh,
sounds good. All right.
It is what it is. Yay!
Yeah.
I get to see if I get to pay more.
Mm.
There, how's that? It's interesting.
So yeah, you have
going
Connect
through
and then you have the
myself,
cruise.
though.
Pardon?
Sorry, it's interesting going through the process myself, though.
Yeah. How have you found it?
Fine. Yeah.
Any suggestions?
No, I actually Bob caught, and when I went in and looked at it, I was like, oh my gosh, that I had totally gapped on filing my HST. I paid it, but I didn't file it, so I'm assuming I have to pay penalties on that. And I don't know how I missed that because we've got such a process, but I think I went in and did it early, and we're trying to catch up with a whole bunch of stuff that yeah. Obviously, I missed something. I thought it was CRA, and I'm looking going, nope, there's no confirmation, so it's all on me.
Yeah. Well, at least it got in.
Yeah, so no, I wasn't too sure because I knew, and everybody can hear us as long as you're okay with that. I'm okay with that. I wasn't too sure how that would actually work out. Let me just share my screen so they can see this too. Just simply because I know you've changed the process a little bit and you've added a few other people into the mix, and I was kind of like, okay, is this going to slow it down? Is it going to take it longer? Like, I wasn't sure how that worked, like how that would work. And I thought, well, again, I'll just go through this myself. So from my standpoint, yeah, if there was extra people looking at it, if there was whatever, like, you're right, I didn't feel that there was anything at that, and I don't know if Bob was the only one involved. So yeah, but because I was just like, from, again, a client perspective, if there's, because the email says that there's all these different people that are going to get involved, I was like, oh, how's that going to feel? But it felt fine.
Okay. Yeah, there's 4 people involved right now in the process.
Okay. Yeah, we'll see, and that's when I'm looking at that going like, holy crow, that's a lot of people. That's a lot of everything, but I wasn't contacted by 4 different people for a whole bunch of stuff. So whatever you've got working in the back end, it's working smoothly. So
part of that is we got a good file.
Yeah.
And we've got good information, right? So that's a big part of eliminating those multiple communications. So essentially Neri handles kind of the intake part of it and making sure the data is there.
Yeah.
And then Larry was doing the review of the data and seeing what's what. And then Bob was going over checking Larry's work and getting the return drafted. And then I review and approve. Hey, there's the Bob.
There's Bob. Yeah. But yeah, but I couldn't believe it when I'm like, what do you mean there's yellow things on here? And I go in and I'm like, okay, yeah, check the shareholders. Yep, I'm good with that. I had no, I did actually have a question for you guys, and the other Bob's here too. And I'm wondering if I can change this in the back end the way that it went in, or if it was set for a purpose, because you guys went in, my accounts payable now shows something that's over, like that's well overdue, because when you guys put your yourselves in as the accrued liability, because you tagged you, that's now showing up as a well overdue bill, but you haven't even billed me yet.
Yeah, no, that's something that we can definitely change.
Okay.
I'd like to have a look at that.
Because I'm like, is it just as simple as just untagging you guys from the name, which would then remove it from my payables list, or is it the way that the accrued I can't remember. And maybe I tried to do, I went in and played with it, but yeah, I thought, well, I was going to ask you about that, because then the same thing is I had to go in, I was showing a bill called shareholder, because when you did this 100 shares or the $100 in shares, the common shares, the shareholder, it created a bill for me.
Let me have a look at how those were done,
Okay.
because I haven't had a chance to have eyes on it yet. Hey, Bob, how you doing?
Good.
Here we
How's
are.
everyone? I think I don't recall, but are you talking about a payable as well? The payable to KATA?
Payable to
Yeah.
KATA and payable to shareholder, it sounds like.
If you check, I believe that might have been put in as a reversing entry. So it reversed on the first of the following year.
Okay, so I didn't check with the payables, because I know it's still pulling on the report, but on the other side of it,
The shareholder?
I had to pay the bill. So my shareholder showed it was zero, but when I pulled my AR list, it showed a credit and a charge, essentially. So then I still had to go in and pay them off, and then archive the shareholder as a customer. So
Yeah. You have to match those, the two sides of the transaction.
yeah, exactly.
Yeah.
But anyway, yeah, we can talk about that afterwards, because it is near time. It's 10 o'clock.
Sure.
So before we actually get started and do this, what I would like to ask is, I didn't realize this when we scheduled. We are scheduled for one in December, which is not the last Wednesday in December, because the last Wednesday in December is the 25th, which is Christmas. So we're automatically scheduled right now for the week before, which is the 18th of December. I'm actually in Florida that week. So I wanted to throw it out there to those who are on the call to vote. If Jonathan and Bob are indifferent, we can just throw it out there to everybody who votes, and anybody who hasn't come in, well, that's what happens when you don't come in on time. You don't get to be part of these important decisions, is to see, did you guys want to skip it? I could definitely make sure that I'm there to be able to do that. But that's, just going to kind of take some planning, because we really didn't know what we were going to be doing that week. We should be getting in Florida the day before. So like I said, if you guys wanted to keep this, I would, work around and just make sure that if we were going anywhere that day, we didn't go until afterwards to accommodate. But I thought I would throw it out there and see if Bob, if you and Jonathan had a preference, and if you guys didn't, then throw it out to the attendees.
I'm kind of leaning. I mean, you're traveling in Florida at that time. It's coming up to the holidays. There's nothing wrong with taking a holiday break.
Okay.
I imagine that if we were to do that one, it would be kind of a recap of what we've been over anyway.
Yeah.
Okay.
Yeah. So.
Okay. And what's your feelings, Bob? Probably about the same?
Yeah, I think so. It would probably just be a recap of the first 9, highlighting the key issues that we had covered. So
okay.
I'm good with
and
skipping.
that's something that you could easily pull into January as well too. So that way people wanted the recap.
Right.
Just shift, potentially add in there. Okay. So to everybody who's out there and on the call right now, just if you just wanted to put into the comments or into the chat, I guess, if you have a preference one way or the other, that way we can take you guys into account. Okay, so Laura's okay postponing until January. Okay, we'll give you a few more seconds. Thank you, Lori. We will for sure. Yeah, we're actually doing the cruise is what we're doing. So the girls are coming down. We can't even get Leanne to do it. That's their travel day. So that's our cruise for winning the Firm of the Future. Is I'm driving down ahead of time, so that way I can kind of cover a little bit while the girls come down. So that way if there is any urgent payrolls, but this is basically why next week is our last real week, because other than that, I think we've only got like 3 days. I've got 2 days. They might have 4 days that we're in the office before January. So All right. So yeah, everybody's okay for that. So that's fine. So we'll go ahead. We'll skip December.
Okay.
Excuse me. Sorry, allergies are killing me still.
No worries.
So we'll skip December, and then we'll just send an email out to everybody who's not, and then we'll remind everybody at the end for any new attendees that come on. We'll repeat that at the end if that's all right then. Perfect. Okay. So welcome everybody to Enhancing the Accountant Bookkeeper Connection series. I do have a hard stop time at 11, just to let you know. I've got a call right after using the same account. So I do have to, we've got a hard stop.
Okay.
At 11 for like right at 11 for that. So yeah, if there's any questions that aren't answered, maybe, you know, everybody can maybe send even an email out afterwards or something, and we can answer them that way if there happens to be any. So that would be great.
Yes, we'll move it along.
Perfect. Yes. All right. So there's me. I think everybody knows me by now. I know all the names of everybody here. So yeah, I'm not going to go through all of this stuff. Just a few highlights though, is that we, I did win for IPBC 2019 Professional Leader of the Year, which is a pretty big deal up here in Canada. Our Bookkeepers Bootcamp qualified for the CC credits in 2018. Again, another big deal. We were the first and still only member-run program to qualify for ongoing credits. Otherwise, we have to continuously reapply for approval every time something has come up. So every webinar, we have to reapply for the continuing education credits every webinar, and I will let you know they are behind right now. I've done a follow-up for them, so I know some of you are probably still waiting on last month and possibly even September's credits for this webinar series, as well as the financial advisory webinar series. They just haven't met. That group is just hasn't had a chance to actually meet and go through it. We have not been denied for credits. No worries. There is no worry that we're going to deny. We just haven't officially been granted the credits. They haven't like just rubber stamped it, and I can't send out the certificates until they've rubber stamped it. So I am going to be following up again because I send a bunch of them at the end of every month. So hopefully they'll be getting those through. If they're not through in the next week, there's going to be a rush of them coming through in January. So please be patient. They will be backdated to the days of the webinars. I have lists, don't worry. And then of course we were Intuit's Global Firm of the Future for 2018, Canadian runner-up for 2017, and Practice Ignition's Top 50 Women in Accounting for 2018. And then a bunch of other stuff, which I'm not going to go through because you guys can all read. And I'm going to hopefully be taking a step back and trying to get some of my boot campers to get all of that, because now I'm on the IPBC board of directors and I'm kind of sick of being in the spotlight. So, so happily step back. So anybody else wants to come in and start going for all of these, please do. Excuse me. So anyway, a bit about myself, passions, family, experiences. I think I need to take off the learning ASL. We paused it and haven't gotten back to it. So it's not actively learning anymore. But yeah, these are just unique experiences and people that we've met with. My daughter, my husband doesn't come in these experiences with us. He only comes cruising. And of course, there's little Rosie, our office manager, and my four-legged fur baby down in the corner. So this webinar, it should qualify for the CEC credit for the IPBC. There will be 2 polls that must be answered in order to qualify for the credits. The recording of the webinar will be emailed within 2 days, and the certificates will be emailed within 2 weeks of when we receive the approvals. So again, they're delayed. Our last approval was mid-September. All the rest of them, again, they just haven't met. No worries. There's no expectations that they will not be approved. So KATA Accounting, a little bit about Jonathan and Bob. So I've been collaborating with them for a number of years. Obviously, those of you, I think all 4 of you were still on the call at the beginning, you know, they even do my own personal or my own corporate tax return now that we're incorporated, which is really interesting for me, being able to go through the process and understand what it's like from a client perspective, and very nice and smooth. But of course, they both work in QBO, very collaborative, and that's what really drew me to Jonathan in the first place. And then when he brought Bob on, I mean, they're just like 2 peas in the pod. Love them both, so that's awesome. We've got multiple mutual clients. I think we're kind of nearing or into the double digits already. They work in QBO, which is really important. Their attention to detail is amazing, and outstanding customer service. So they really focus on that, as opposed to some accountants are just more transactional, just boom, here, sign it. They want to make sure that, you know, again, the clients understand everything, because it makes life easier going forward. And that's, you know, rare in some of the accountants that I've met. It's certainly not, you know, I've met other accountants that are like that, which is great, but I found that it's very rare. So that's, again, what just drew me to them in the first place. So I guess that's it. So you guys can take it away and get started then.
All right, let me just share my screen here. Oh, I cannot share. Okay, there we are.
And you should be able to share now.
So everybody should be able to see the screen now. I'm Jonathan Carter. I started KATA in 2014. This is our kind of general contact email address. If you do have a specific question, Bob,
Yes.
can you mute yourself? There's a lot of background noise there.
Oh, okay, sure.
Sorry, thanks. If you want to have any direct questions or anything you want to ask, you can reach me at jcarter@kataaccounting.com. So a bit about me. I have been considered a thought leader in the industry of accounting and technology. I was a member of the inaugural Accountants Council for Intuit. That was a group of accountants and bookkeepers who helped them to develop and steer the direction of their product. I am an elite ProAdvisor and technically still an Intuit All-Star. I think that's coming off. I think that program is evolving significantly. And winner of the 2018 Inspire Accountant Award for contributions to the future of the industry. As Tanya said, we're known collaborators. That's what we're all about. Accountants should be partners with their businesses, their customers, not a vendor to their customers. This is not a one-off transaction. This is something where people need more than that. That's, you know, and also too within the industry, it's always great to get together and collaborate with colleagues. Had a great session with Esther not too long ago going over Dubsado. That was a lot of fun. And I think something might come out of that more extensive. I have a lot of experience in the mortgage industry. I have a lot of experience with rental properties. I have some rental properties myself. And as a firm, we do a lot of business in the e-commerce, digital and affiliate marketing, and those kind of service-based internet businesses. I recently became the treasurer of the Japanese Canadian Cultural Center. I'm also acting as interim treasurer for a not-for-profit called Tab Community Cares that's just kicking off. Brilliant idea. Fantastic story, but I won't get into that now. Long story short, they're trying to just help people in their local community who need the help, like low-income seniors especially, and single moms especially. In my free time, I love to fish, but I'm what they call a soft water fisherman. I'm not huge on the ice fishing and the snow and stuff like that. I also like MTG, if anyone knows what that is, and I'm an avid poker player. I'd like to say I'm an avid poker player, but that doesn't really apply anymore. I don't play that often anymore, but I do enjoy it, as you might have seen Andrea and I discussing online a bit, maybe. But Bob, do you want to talk about yourself for a minute?
My sound?
There you are.
Okay, thanks. You muted me. Good for you. Yeah, I've got a funny screen up here, so it's one that I haven't seen before. Seems like I'm bouncing through your screen, Jonathan, or the moderator, but that's okay. You can mute and unmute me as necessary. So the four legs of my rather lengthy career are indicated here. I won't go through the details. I went to the University of Waterloo. I moved on to a CPA firm, worked up to the manager level, and then I moved into industry, worked with a few interesting companies like Gerber, the baby food people, and big focus on insurance companies, which are known to be one of the more complex accounting types of businesses that you can work with. And that's primarily because the liabilities for an insurance company are the potential payouts of their insurance policies. So, and that is a soft liability. It's kind of hard to measure and takes a lot of a lot of background calculation. I live in Georgetown with my wife and 4 cats, and I enjoy a few different hobbies. I kind of bounce back and forth between them. Right now, my hobby is moving. We're moving to a new home, so it's taking up a lot of our time. Happy everyone's here. Welcome.
Yeah, I'm very excited for you and you guys in the new home. It is gorgeous. You know, it's about my dream location. So.
Good fishing there, Jonathan.
Oh, definitely. We'll show you some spots in the summer once you guys get settled.
Okay.
And I figure I said to Jonathan that he's probably going to have or maybe it was Bob. I said it to one of you that, yeah, Jonathan's probably going to have his own room up there too, right?
We've already picked it out.
Oh. Okay, so this is just what this webinar series has been about is management accounting. Simple definition of it is providing financial, non-financial information to support decision making to management. It's very informative. The profession, I was trained as a certified management accountant and became CPA, CMA through the merger. When CPA, CGA, CMA, and CAs all combined to become CPAs. It involves, working on decision-making tools, planning, performance management systems, creating KPIs, monitoring, trending, those kind of things, and providing expertise in financial reporting and control to assist management in the formulation and implementation of the organization's strategy. One of the things that we were very aggressively taught was that everything you do in management accounting needs to link back to the strategy. That's the key thing. If it doesn't link back to the strategy, you shouldn't be doing it. So, all right, so I'm just going to go to the next slide. So management accounting is generally used by insiders, whereas financial reporting is used by outsiders. It's required quite often by law to do financial reporting. For instance, filing a tax return involves some financial reporting. But the management reporting is often at the discretion of management. And sometimes people would like the idea of it, but they just don't pull the trigger on it. So when it comes to dealing with your clients, it's important to be able to have the discussion and help your clients see the value in this kind of reporting if they would benefit from it. The financial reporting is from the corporate entity perspective. So you could have one corporation or group of corporations. That's how your reporting is going to be. But with management accounting, you can get right down into an individual person or whether it rained that day. So there's so many interesting things such as, a place that requires heavy foot traffic, how are they affected by the weather, things like that. And financial reporting always looks backwards, whereas management reporting looks backwards in an attempt to predict the future. And that's where it can get really interesting, where you get good forecasting and whatnot. So the objective of these is to give you ammunition, essentially. What can you do for your clients? How can you become more of an advisor as opposed to a transaction for your clients? They're not going to talk to you about this. These are things that you have to discuss kind of an abstract and then say, hey, I'd love to look at this. Would you be interested in signing up for? And go on. This is the advisory, the becoming the trusted advisor that we always hear people talking about. The most important thing is to schedule and stay on top of this kind of reporting once you have it, but it will build a lot of trust with clients. If you're doing this kind of thing and they're seeing the value in it, they're going to start reaching out to you for more and more and more. And especially if you can help them do things like grow their sales, improve their bottom line, help them prepare for the sale of the business, things along those lines. So this is just a list of the various topics that we came up with. I think, Bob, you came up with most of these, and then which ones would be the best to talk about. So as you can see, there's a ton of management accounting topics we didn't go into. You can see the month in which we did them. The webinars are available, I believe, through Bookkeepers Bootcamp. Am I correct, Tanya? And
Yeah.
so people can go and view all these older webinars. And of
Well,
course,
so all of these are the public ones. No, just my YouTube channel. So if you go to my website, which is either cloudbookkeepingservices.ca or bookkeepersbootcamp.ca, just up in the top right hand, like they both link to the same place. Up in the top right hand corner, click on the YouTube link, take you to our YouTube channel, because I think it's under Cloud Bookkeeping Services, but I'm not 100% certain the YouTube channel. But all of these are on the YouTube channel.
okay, good. So like anybody can go back and review them. And as you can see, there's a lot that we didn't get into. So if because this is the last webinar of the year, if there is any of this stuff that you'd like to know about, please, by all means, reach out directly. The good old slide. Bob, I always get you to look at this one, but I'm going to take a stab at it.
Yeah, no, I always try to position the particular topic that we're discussing within this framework. So moving from left to right on this slide, we go from the mandatory financial reporting that a company is required to do. And if you think of public companies, like they're producing their annual report, there are requirements and guidelines that they have to meet in terms of what they disclose. So a lot of the webinars that we've been doing fit on the right-hand side of this slide, the planning and decision support, because that's related more to management accounting. It's what management needs to help them plan, and Jonathan mentioned strategy setting, and then monitoring whether you're fulfilling your strategies or making decisions. Today's webinar is going to fit more in the middle because it relates to public company reporting, but it also blends over onto the managerial side, because it is a way of breaking down your financial results so that management can understand pieces of the business, not necessarily the entire business. But it's also meant, as we'll see in a couple of slides, to provide information to people who are actually investing their hard-earned money in the company, so they can understand the nature of your business better at a more microscopic level. So if you think of kind of the performance evaluation and analysis, which is a bit of that is your public reporting, and then the planning and decision support, that's the area we're going to fall into today.
All right. So, first poll. Which of the following would be least helpful disclosure for a company reporting segmented information? Description of the products and services for each segment. Identify key management team of each segment. Basis for determining segments. Or reconciliation of segments to consolidated total. And I'm going to let this have a minute.
All right, so we've just launched that. So just remember, out of the two polls, we need everybody to answer the two polls in order to qualify for your CC credits. And there we go. Okay, we've got just one more person. So we'll give a few more minutes. There we go. Perfect. We will just close it down now because we've got 100%. So we'll end the polling and share the results. So we've got 25% have chosen the description of the products and service for each segment. 75% is to identify key management team of each segment.
All right. It's always interesting to see what people have to say in these areas at the beginning before we've really talked about anything. So I'm also kind of curious how many people actually do any kind of segment reporting for their customers. Is it possible to do kind of a quick informal, like shoot in the chat box? Oh, I never do that, or?
Yeah, shoot in the chat box for that. Absolutely. Yep.
All right. So.
No responses yet, but yeah, if you do want to respond to that, then yeah, go ahead and put that in the chat box, and then you can take a look later.
All right. So what, who, and why? Segment reporting is the reporting of important operational segments of the company. So to give an example, when we look at our books, we use the class system in QuickBooks Online, and we can see everything that was personal tax, everything that was corporate tax, and everything that was bookkeeping for our three kind of legs for our business. It's required for publicly held companies, but not required for privately held ones. However, I will say it is extremely important. There's another company that I know of that sells power equipment, and they have, I believe it's 12 different brands that they represent across Canada, and some of which they across North America. And they look at each one of those as a segment, and it helps them make strategic decisions about where to put resources and things like that. So it's intended to give information to investors and creditors regarding financial results and position of the most important operating units of the company. So those are some of the reasons for doing it, or the why, and so on.
And once you segment your information, if you think of investing in a company, if you can see the different business segments, you likely will have a viewpoint about which part of the economy is likely to do much better than other parts. So if you can see that a company is positioned in a segment, but it doesn't have a large share, and you think that segment of the economy is going to grow, and this company is positioned, then you will be more likely to want to invest in it.
Mm-hmm. And similar, if you see like some kind of activity like merger and acquisition activity, it increases or changes the way a company is held, small business. Do you want to tackle this slide?
Sure. I mean, you were breaking up a little bit in the.
Oh yeah, that's why I asked you to tackle this slide. I just got the unstable internet.
I thought it was just me, so
Okay.
I'm glad to hear it wasn't just me. So, okay.
Oh, great. Okay. Reporting by class for the nonprofit that you do the books for. That's great, Lori. So this, looking at segmented reporting under GAAP, generally accepted accounting principles, they get pretty specific about what you have to report, how you split it down. So this slide is meant to give you an overview of that. So an operating segment engages in business activities from which it may earn revenues and incur expenses. Sometimes it's just incurring expenses, as we'll see in some of the later examples. Of course, if you're doing reporting on a segmented basis, you need to produce in your accounting records the discrete financial information. So you have to have a way of breaking down your totals into each of the pieces, obviously, that you want to report. And the key here, and this is a theme that runs all through segmented reporting, according to GAAP, they don't tell you how to determine your segments. It has to be the pieces that management regularly review in terms of evaluating the overall company and its performance. So it's basically whatever management considers important to look at in terms of breaking down the company's results. That's what GAAP requires you to report to the public. And we'll see some examples of this as we go along.
Okay. So there are some guidelines for reporting segments. One of them is to aggregate the results of 2 or more segments if they have similar characteristics. It should have at least 10% of the revenue or P&L or assets of the entity. And the segments that you're reporting need to recover at least 75% of the entity's total revenue. So you might end up with, you know, for example, the power equipment company I was talking about. I know that predominantly it's 2 lines that are kind of their segments. So they do those 2, and then the next few, and then they have the balance in the reports. They try to keep this number of segments under 10. That is very important because you don't want it to get so complicated that it's meaningless. Did you have anything to add about this, Bob?
Yeah, just one little anecdote from personal experience. Sometimes a business, a company does not want to disclose the performance of a certain segment of its business. Maybe because that segment is doing poorly. That's the most common reason. So you don't want people to see this piece of your business that, if you want to put it this way, that's a little rotten. So you try to hide that. So you try to kind of skate through the rules, but if it has, you know, 20% of the assets of the business, it's going to be pretty hard to exclude it. So you sometimes can jump through hoops, or maybe even play with the numbers a little bit to transfer some assets to another segment, so you're under the 10% rule. So just a situation that sometimes people run into.
Yeah, that's it's funny how those politics in accounting really come up in those public companies quite often, and even in larger businesses where management is accountable to a board, like larger small businesses. Yeah, sometimes as accountants we have to kind of say that's not appropriate, and those can be very difficult conversations sometimes. So, all right. So Bob, do you want to continue on with this?
Mm-hmm, sure.
Okay.
So this is a little piece about the allocation of costs. When you're splitting your business down into segments, you obviously have to take your expenses and break them down between those segments. This goes back, I think it was the 3rd presentation we made in this series, where we talked about direct and indirect costs, variable and fixed. So we're repeating that, and you know, I'd suggest you go back and look at the 3rd webinar in this series. But I think if we go, I think it's the next slide, you'll be able to see more directly through the numbers the type of expense allocations you're going to do a breakdown for. So this is just a quick example. You're going through your revenue down to the margin that your segment produces. So the profit that you get from each segment, segment 1 and segment 2 in this case. One of the keys, and you're going to see this, we're going to be looking at a number of examples for most of the rest of the webinar, raising points that you can see from the examples. But you're always trying to come back to a consolidated total. So that total column is quite important. That should be the profit that you're reporting for the entire enterprise. So if you have some eliminations, or you have, quite often you're going to have a corporate group, so you will have to include those numbers. And you can see down on the bottom, there's an unallocated fixed cost bundle, $8,000 in this case. So those are likely high-level administrative and executive costs that you can't really relate back to an operating piece of the business. So it isn't necessary that every single cost be allocated. You have this bundle of unallocated costs that they're there to run the entire enterprise, not any particular operating unit.
All right. So it is impossible to capture all the different dimensions of segment information in a single schedule. I mean, we have lots of different areas we could look at. So there's different ways we can look at and disclose that information. Bob, I know you put this together, so if you don't mind, I'm going to get you to run through the examples.
Sure, sure.
Is this cut off or is this my screen sizing?
No, this is
Okay.
this is the way, because it's a sizable chart. I use the entire slide to put it together. So the first group of examples, it's just charts of numbers. So this is one way companies have come up with to present their segmented information. In this case, you can see the segments down the left-hand side. We have medical, scientific solutions, and imaging, and then others, and then the corporate and eliminations. So you do come back to your consolidated totals at the bottom. You can tie that right back to the consolidated financial statements. So companies aren't able, much as they would sometimes like to, they aren't able to hide anything. In this case, the two pieces of information that they've chosen to disclose in this chart are the revenues of each of the segments and the operating profit. So we don't have the assets here, which obviously is another important piece of the information. In terms of analyzing the operating profit, your eye is drawn to those blue boxes that have borders around them, and the comments they include at the top are explaining those blue bordered results, which are the key ones in terms of arriving at the change in profit for the year. So they explain that in the medical segment, the operating profit increases due to a decrease in one-time expenses. So for an investor, that is likely a critical issue, and they will be focused on that. Are those one-time expenses going to recur? They're going to try to project that factor into the future to see how important it's going to be in the company's future operations. And of course, management's going to know a lot about that too. In the imaging segment, the break even is going to be achieved in the latter half of the forecast year due to transferring production to Vietnam and the launch of new products. So there's a whole pile of analysis and additional information that analysts and investors are going to want to dig into there in the imaging segment. And then they talk about the elimination in corporate, because those numbers have changed quite a bit. They're negatives, but the forecast is significantly less negative than the actual year, fiscal 2019. So again, we have a decrease in one-time expenses. What were those one-time expenses? So in this chart, you can garner a lot of information. You can divide the operating profit by the revenue to look at the efficiency of earnings, how much profit falls to the bottom line out of the revenue total. So you want to look at percentages. You want to look at the trends going across. You want to look, now you know the key operating segments like medical is a whopping piece of this company. So if you're analyzing it, you want to probably focus on that. But scientific solutions is profitable. So are we going to be able to grow that segment? So there are literally hundreds of issues you could analyze here to learn more about the company and assess its future prospects. So that's one way of producing a chart to show segmented information for a couple of the financial items that we need to report.
Yeah, when we look at our P&L for KATA, and the comment with the not-for-profit really brought up, we do that at the cultural center as well. We tend to group the classes together though, because I mean, really, who cares how Aikido did compared to karate, unless all your focus is on martial arts. It's too detailed. So grouping them together to see those things can be really helpful towards steering us and helping us understand what's contributing to the bottom line, what's not, and then we can dig into why. So sorry for interrupting, Bob. I'll let you go on.
No, not an interruption at all. That's helpful.
Okay.
So another example showing just a chart of numbers, the segments across the top in this case. Again, they show corporate, and you can see corporate is just a sunk cost. It's a cost. There's no revenue related to that. And then the eliminations to get to the consolidated totals. In this case, the information they're showing is revenues, net sales. They're showing the income before taxes, but they also include assets. And then I found this interesting. They show some other items that are not required disclosure under GAAP, but I assume for this particular business, these are critical pieces of information that management looks at and considers important. And right at the bottom, property additions. So they're looking, these are cash flow items, property additions and depreciation. So what they're giving you the ability to do is property additions are hard cash out the door. Depreciation and amortization obviously is just the write-off of previously spent money. So we can see for the SCBU, whatever that is, in the first column, they're spending a lot of money on new additions and the depreciation is much lower. So that has important cash flow implications.
Mm-hmm. Sorry, I lost my cursor here.
Probably fell on the floor.
It was off on the video screen. So
okay. So this is another example, a chart with numbers. It looks different than the other two. In this case, they're reporting in blocks of information for each financial year. This is split by geography, not by the type of business operation. And that's valid. This is obviously how management thinks about their business. So that's what gets reported. You can see the totals add across to a group total. So I'm thinking that there are probably also group breakdowns in terms of the consolidated totals. So this may be a sub-segment breakdown. And the items they're reporting are sales, assets. Interesting, they also show, they break out current assets from total assets. So, and the current assets tend to be a large proportion of the total assets. I find that interesting. So they don't have a lot of long-term stuff. Don't know really what this business is, so I can't make much comment about that. But and then they show the investments for each of the segments and the growth. So again, a different set of financial items that they're showing, and a different type of breakdown, and a different way of displaying the information. And you wouldn't, in a public company, you wouldn't believe the amount of time that's spent discussing and trying to determine how you're going to show your information. That's what I say. It's impossible to put everything on one piece of paper. You'd like to do that, but you probably have to show it on 6 or 8 different viewpoints to get the information out there.
I was going to say that'd be one really big piece of paper.
And it would have to be like 5-dimensional, which really doesn't work in our world of 3 dimensions.
So there is just kind of a little anecdote I wanted to mention about there's a lot, I think what this really demonstrates the last few slides is there's a lot of different ways to slice the pie. There's a major auto company, not a manufacturer, but like a support company. And I know that they segment by country, they're international, but they also segment by their revenue type. So like it would be auto parts, it would be like maintenance parts, and then like kind of goods and sundries, those kind of things like that, you know, oils and lubricants and things like that. But they're looking at that across countries. They're looking at that across their revenue segments. So there's a lot of different ways to slice the pie. Another thing that we do, and it's more of a curiosity thing that I started at the beginning, was we track where our business is coming from too. And a big part of that was to understand that, you know, as a cloud-based business, how is our business developing? How is our business growing? And to see where our actual physical customers are at least headquartered, if not located. So it's multiple countries on your locations list. We're up to 13 now, by the way, but it's mostly personal tax issues. So it looks like this is another example, just leading kind of right in, very similar type of company. That shows how they're, I'm not sure if this is showing profits or if this is showing revenues. I'm sure it's in the thousands of dollars or the millions of dollars. But this is just an example of how you can look at the pie and slice it up. Bob, did you have something you wanted to add to this, or?
No, not really.
Okay.
I found it interesting. They've got two segments that are around 3% each.
Mm-hmm.
It's interesting they didn't combine them. I found that
Mm-hmm.
interesting. So obviously the assembling vehicle division is of some kind of importance to management, and they feel it necessary to break it out separately.
Yeah, maybe it's because of the market and things like that, keeping an eye on those things.
Yeah, I would say probably growth.
Yeah.
Or profitability. It might be an amazingly profitable piece, and they want to get credit for high growth, or
Got to self-promote at that senior level. Get those next bonuses and contract renewals.
Absolutely.
Okay. All right. This is kind of difficult for me to read. Bob, can you?
Yeah.
Okay.
So this one's interesting because of it shows profits and assets. Like we've seen revenue and profits in previous slides. This is assets and profits, and almost immediately, much of accounting is doing relationships. So there is one segment that jumps out of this chart that you really want the company to grow. And if you think about it, it's a segment that's earning high profits, but has low assets invested. So if your eyes didn't go immediately to the real estate, which is the lightest blue, only 7% of their assets are invested in that, but they earn 22% of the profits. So right there, you can see the benefit of segmented reporting, and you can tell where you want the company to be trying to do its growth. The laggard here is the retail, which has 36% of the assets, but only 21% of the profits. So, you know, it's interesting the information you can derive from this segmented reporting, and hopefully we're displaying that.
I think something else that you kind of alluded to or didn't mention specifically, but I think is very important from this slide, is how important it is to use a visual representation for non-financial people. Like on this, it is very easy to see that real estate item and that retail item. Whereas if you were looking at a spreadsheet, you might go cross-eyed before you figure it out. So I think that's just kind of a highlight. All right.
different type of chart presentation here. It took me a while to figure this one out. So they've got two scales, revenue on the left, and that is the bars, and operating income on the right, which is the orange line. So they're breaking it out between photo imaging, electronic imaging, and optical devices. And that's their revenues. Now, they don't break out the profit, which is also interesting, as far as I can tell. Sometimes you have to stare at these for a while to see exactly what they're telling you, but it seems to me they're only showing the total company operating income and not showing you the splits. So I'm a little disappointed in that. But again, a chart presentation where you can pretty quickly pick out certain factors that are important, or segments that are important to the business.
And again, highlighting the importance of a visual representation to non-financial speakers. All right.
I thought this one was interesting. It looks like a telecommunications company, so quite different than a manufacturer, and the two segments they pick out are desktop and mobile. So the key factors they look at are users in total, new users, sessions, and number of sessions per user. Then on the lower level, page views, pages per, I'm not even sure I know what all of those are, but it's stuff that they consider important. They look at
sorry, go on.
Session duration and the bounce rate. So I would hope there would be specific definitions of some of these measured items given in the annual report.
To me, this looks like it's a web-based company, and this looks like website metrics. How are people accessing? How long are they staying? How often do they just bounce out? Things like that. I could be wrong, but this definitely looks familiar from the way people interact. This might be something you look at for your website. Are people accessing via mobile? Are they accessing via desktop? Are they staying longer in mobile, staying longer in desktop? Where are your new views coming from? Those kind of things might help you direct the marketing for your bookkeeping company. All right. So we have to put in an apology.
Yes. So the important capture in the next two slides is not trying to read the text, but showing you how complicated sometimes this segmented reporting can get. So you're meant to take in the overall picture, not try to read there aren't any numbers. This is just a framework for reporting. So the keys, and hopefully you can see they're breaking down revenues and expenses. This is another type of enterprise. It's an ABC First Nations band, and they break their segments out by education, health, economic development, and housing. They don't put totals in here, so hopefully if you add the numbers across, you come to the consolidated totals that they're reporting. But you can see significant breakdown, and their accounting system must be all excruciating to follow just to be able to extract these types of breakdowns from their accounting system is pretty drastic.
All right, and we got another tiny.
Yeah, another microscopic. But here it's interesting. They're reconciling the net income to adjusted EBITDA, and EBITDA is a measure that is used widely. It's a cash flow measure. But how you get from net income to EBITDA, when I worked in oil and gas companies, the cash flow measure was more important actually than the net income. Because of the significant capital investment, it was important to distinguish that. We talked about it earlier, the actual cash going out to invest in the business versus the write-offs that impact income. So they're focusing on cash flow here. And again, your accounting system has to be set up to extract all this granular information. So just to show you that segmented reporting can get very detailed. You're trying to be informative when you put out your annual report. You're focusing on what management thinks is important in running its business. So sometimes you have to put a lot of effort into, I'm sure this schedule, probably 4 staff of 3 or 4 accountants are hired to be able to pull it together and report it every month.
Yeah, this looks juicy. A lot of work there. All right, we're on to the next, or the last opinion, the poll. So which of the following are not required in segment reporting? Assets, profit losses, liabilities, or revenue?
All right, so just a reminder that we need everybody that wants the CC credits and answer the first one to answer this one as well. So we need both of them answered, and then we have 5 minutes.
We threw you a bone this time. We should get 100% on this one.
All right, so we've got 50% voted, 2 more.
I hope you can see the right answer here, folks.
It depends on where that's kind of showing up on their screen. Because my pop-up, yeah, covers over there, so I don't know if we can see that. So we've got perfect, 100% voted. We'll end the polling, share the results.
Oh. Okay, that's okay though. All right, so we've only got a few minutes left. Tanya, I know you have a hard end to this webinar. Are there any questions? Are there any thoughts, some ideas, anything about how you might use this kind of reporting? Tanya, I'm curious, do you guys do this for any of your clients?
We don't, because our clients, we deal with the startups and that are more concerned about compliance. We are trying to work them into this type of thing. What we kind of do is we essentially tell them, when we kind of pick one at a time, and we tell them that we are going to launch a pilot project. We pick our apps that we want to work with them. We pick clients that we think that we can help, that we can show the value, and we basically give them 3 months for free. We cover the cost of the apps. We spend an hour a month with them, kind of going through some things, building things for them, making them understand, again, a little bit of the cash flow and the forecasting. So we're building it into a cash flow, a financial advisory that way. And then once we've been able to show the value after 3 months, we just ask them, okay, well, what did you think? Again, thank you very much for your time. So we're, building this to send it to clients. What did you think the value was? And, we'll then turn around and say, well, we'd like to offer this continuing to you, at, a low price of $250 versus the $450 that we might normally give it to somebody, or whatever it is that we come up with. We're a little kind of fluid on that, depending on the value that they see they get out of it. But generally $250 is kind of the average that we have for the clients. But again, we cherry pick those that we feel that we can show the value within the 3 months. And again, we use the same verbiage to all of them. We're going to, it's a pilot project. Do they want to get involved in our pilot project? So it's a soft sell. It's like the taste testers, the Costco taste testers.
Yeah.
I'm here, taste my food. So, and that tends to work for us. And then we can start to bring them along again, get their toes dipped in, and then maybe get into something a little bit more complex. But for the most part, most of them aren't at this, because of course we have to be able to fit them in before we can offer to a new one. And then all kinds of stuff comes up here. So, but we do have a few on, again, kind of something similar, but we try to lead them that way because most people don't realize how much they really need this reporting until they get it. But it has to show value.
Yeah, there's a lot of ways a small business can really benefit from this. I'm just gonna, a quick anecdote. I think we have 2 minutes left, and we don't have any questions, which is unfortunate, but c'est la vie. So we do have a client who has essentially 3 main products that sell all in the automotive industry. And by the way they have it set up now is it's 3 different companies. So they're looking at those companies, but every now and again bringing in and looking at you know, customer lists and cross-selling opportunities and things like that can add more information. And by having it segmented in that way, they can see what is profitable, what is not profitable, where they should be investing, where they should be divesting. And it's a bit of a fluid industry. I mean, the automotive industry is very reactive. And sometimes there's high value in what they have and what they have, different indirect competition for one of their products, which is forcing them to pivot, which is good. You know, that's an agile business is one that tends to stay in business. Anyway, I think we're about out of time. Bob, did you have any closing comments?
No, I think I'm good. Hopefully this was informative and gave people some things to think about.
Yeah.
Awesome.
Okay. Thanks, everybody. Thank you very much, Tanya, for hosting.
All right, well, thank you very much. So again, I don't think we've got anybody new that's joined the call, but just a reminder, we will skip next week. I will send that a reminder out with the recording for this, as well as I'll make sure that another one goes out that we officially cancel next week. So go to anybody who's registered and didn't make it today.
Yep.
Perfect. So thank you very much. Have a wonderful day, everybody.
Bye, Tanya.
Okay, thanks. Take care.
Bye, everybody.
Bye.
Bye.
Bye.